Hey everyone, I'm Mark Hart, and together with our CEO and founder Matt Sinclair, as well as Andrew Glisson, today we'll be diving into the supply and demand dynamics in the Memphis suburbs. We'll be sharing the top development projects and target submarkets with strong population growth that compose of the best areas to invest for long-term rent growth and appreciation.
The Memphis MSA is experiencing a surge in large-scale corporate and infrastructure investments. Roughly $34 billion in projects are underway, which in context is about a third of the Memphis MSA's annual economic output. To put that in perspective, it's like injecting several years of growth into just a few years. And for a city like Memphis' size, this scale of capital investment is truly transformational. It creates new jobs, drives immigration, amplifies housing demand across the suburban markets where we're focused. This slide shows the scope of major developments underway. From Ford's Blue Oval City to Google's new data center campus, the more than $34 billion in projects that are underway will create approximately 16,000 high-quality jobs, which represents a significant rental demand driver for our target suburban markets. And importantly, this is just the beginning. In addition to projects you see here, there's significant additional developments in the works, including Dell, NVIDIA expansions that are tied to the AI and advanced computing boom. Memphis is positioning itself as a hub, not just for logistics and healthcare, which we've been known, but also for next-gen technology infrastructure. Blue Oval City alone is Ford's largest investment in company history, and it's going to be operational by 2027. XAI is building what's expected to be the world's largest supercomputer. And add to that a multi-billion-dollar expansion from St. Jude, the Regional One Medical Center, and as mentioned earlier, Google. And you start to see why Memphis is a jobs and population growth story for the next decade. This kind of economic engine directly supports our build for rent strategy by ensuring a growing base of families and professionals seeking quality housing.
Suburban submarkets of the Memphis MSA are experiencing elevated population growth on a sustained basis. The growth of these suburban markets is being driven by various employment opportunities, but also by people moving out of the urban core into the suburbs. Families are looking for larger living spaces, safe neighborhoods, quality schools, and modern infrastructure. On the map on the slide, you can see the areas in green that represent areas that have been experiencing elevated population growth. Importantly, the suburbs of Memphis have been substantially underbuilt relative to demand in terms of single-family housing and generally Class A rental properties specifically. There's been significant demand for our Class A new construction rental properties because for Tranche 1 of MIP Capital Partners BTR Fund 3, which closed on September 30th, about a month later, as of October 31st, we have pre-leased 9 of the 13 houses, with all 9 pre-leased houses at or above our target rents. These suburban markets are in high demand from renters, but there have not been enough houses built in these suburban markets. In the Memphis MSA, supply inelasticity, driven by sewer capacity constraints and permitting challenges, has contributed to suburban underbuilding.
Housing starts in the Memphis MSA have remained subdued post-Great Recession, resulting in a substantial and persisting supply-demand imbalance, despite there being consistent demand for single-family housing in the suburban markets of the Memphis MSA. And as you can see from this chart, from the beginning of the Great Recession in 2006 to the trough of the Great Recession in 2009, annual housing starts fell by approximately 83%. Since 2011, the suburban market population growth within the Memphis MSA has been elevated, with annual population growth in those areas substantially exceeding the national average. But as you can see from this chart, housing starts have remained low. This has resulted in a substantial supply and demand imbalance for single-family housing in the Memphis suburbs. We've identified specific suburban markets within the Memphis MSA that have large supply and demand imbalances and also have various other characteristics that are part of our proprietary screening process, such as school quality, population growth, and favorable demographics. This list on this slide represents our target suburban markets And these are the areas where we work with our home builder partners to identify the right developments, lots, and floor plans for the new construction houses that we ultimately purchase, lease up, and manage. We've identified the specific price points at which the supply gaps exist to ensure that the submarkets can efficiently absorb lease-ups. The three suburban markets outlined in red are the markets represented in MIP Capital Partners Build-to-Rent Fund 3. As measured by current single-family home inventory versus projected 12-month demand, each of these markets is substantially undersupplied at specific price points, and we're mindful to target these specific price points as buyers in these suburban markets. This slide shows a comparison of the three suburban markets represented by Build-to-Rent Fund 3 across some different, very important metrics. MIP Capital Partners was founded to capitalize on the long-term secular trends driving growth in suburban markets of secondary southeastern MSAs, of which Memphis is our base market. And this is a market we know extremely well and have had a lot of success with owning, leasing, and managing new construction properties. The school quality within these three suburban markets is also relatively high, with the average school grade for our Build-to-Rent Fund 3, for example, being a 5 according to Great Schools. And combine that with the specific characteristics of our houses, Build-to-Rent Fund 3 is in the buy boxes of American Homes for Rent, Invitation Homes, Progress Residential, First Key, and Amherst, and that's by design. Those businesses are the largest single-family players in America, and 4 of those best-in-class SFR owners are large owners in these specific suburbs. And as you can see from the slide, these suburban markets have experienced healthy appreciation, rent, and population growth. If you visit these markets, you immediately notice that the infrastructure and amenities, to a large extent, are relatively new. The school quality, being high on a relative basis for the MSA overall, is also to some degree a function of the ability to spend. This is symptomatic of the pro-cyclical and self-reinforcing nature of population growth within a finite suburban geography. As the population increases and the property tax base increases, the ability to pay for infrastructure, amenities, and schools increases, which further increases the appeal of suburban market for potential residents, which drives further population growth and housing demand, which drives cap rate compression and lowers home affordability, that can be very beneficial for the demand for Class A new construction single-family rental properties.
All right, if you'd like to learn more about how you can passively invest in Class A new construction rental properties in these areas, please visit our website at mipcapitalpartners.com, or you can contact us individually. My personal cell phone is 901-800-6693. If you'd like more information, please reach out. Thanks.